What's up, everybody? Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again. Interesting day, of course, coming up. I suppose they always are. If they weren't, I'm not sure why I'd be doing this, but it it is actually an interesting day, in the sense that we are trying to understand whether we are going to continue to see some of this upside that we've been enjoying over the past couple days, or whether this is just, it's on its way out. Things are going to fail, right? Maybe we fall through some floors again. We go all the way back to 2450, something like that. Is that really what's on the docket? Certainly heartening to see this type of recovery that we've been looking at over the past couple of days manifest as we thought it would, heading into the institutional filing deadline coming up this Friday. Definitely interesting to see what institutions were doing last quarter. Interesting to see that pretty much not everybody, but so far, any of the big guys that had picked up some GameStop back in Q2 basically added to their positions in quarter three. So, I mean, that also encompassed October, right? We had these deep lows in October and early November. So not necessarily an indication that they picked up stuff in kind of November, December area, late November, December, and some of these increased prices, but definitely interesting to see there. So yeah, so that's what we're thinking about today. We're in this context of seeing how much more run we have out of this sort of midterm recovery here, and to what extent that is going to unfold over this week, what this kind of end of this week is going to look like, and sort of what we're looking at heading into the next couple weeks as far as what to expect in February and March. So we'll take a look at some of that today. Let's see here. Let's make this stuff nice and big. There we go. So thanks as always go out to today's sponsors, Super Mega Ultra 7 and That's Grefto. Thank you as always for your support. Right here, I should just say I don't know who he is, but my policy is certainly right. Everything is open access. Everything is publicly available that I talk about. I do not have any content that I keep behind any paywalls. I'm not monetized anywhere. So, thank you very much, of course, to everybody who expresses their gratitude. Thank you certainly for my coffee today. And thank you certainly, Scruffy, for keeping this, helping support my continued research endeavors. So let's hop into what we're looking at today in terms of our overall context. Right, yesterday we were looking pretty good in terms of what we saw in SPY. Right, didn't have our gamma data. SPY was looking like a pretty good framework. We stayed pretty much the whole day over our gamma flip line. Right, we opened up pretty strong out of the open, right up over 603. That looks like where our gamma flip line was. So we basically stayed the whole day trading in this call gamma dominant framework, very stable, right? We get these kind of oscillations, stayed above VWAP, stayed above the 200-minute moving average, look pretty good there. We had that gamma flip line there yesterday, and as we look today, that's basically where it is. Did it move up at all? No, it's basically right in the same spot. So we're still looking at the same stuff, right? Assuming, right, that call gamma is indicative of trader long, dealer short gamma, and put gamma being indicative of trader short, or that is, call gamma being indicative of trader long call and therefore trader positive gamma, and therefore dealer negative gamma. The inverse is true, of course, for put gamma. So assuming long put position, so trader negative negative gamma on their books, dealers positive gamma on their books for that, and how that affects our hedging properties. Right, still looking at basically the same setup heading into today. Call wall sitting at 610, volatility trigger down at 600. If we have some reason to trace down into that kind of 602 area, and it looks like we're going to keep falling, right? Volatility is definitely going to spike up as we get to this 600 position, this big 600 position. Even if we do, right, what's going to be key is noticing how we behave kind of on the way there. If it looks like, if we do trade down, we might get a little initial kind of bump hitting that because it is such a big put position, as kind of IV goes up. So that might that might send us kind of back in the other direction momentarily, might prevent us from kind of falling through that level. But altogether, not terribly worried about this right now. We look to be doing okay with how we're set up in the market presently. Actually, no, we actually fell through. That's very interesting. So while I was setting this up, SPY went ahead and fell through. Yeah, there you go. So a little live surprise for us today. SPY went ahead and fell through fell through the volatility trigger there. So we're seeing 598 values popping up. Very interesting to see. And we can see, all right, well, there you go. There's a case study for you. My thesis that I kind of, put out there a bit, why we do these contextual scenarios, is certainly that if SPY trades down, if we see this weakness, if we cross something like the volatility trigger over in SPY, that is going to bring GameStop down with it, right? That's going to drag GameStop's price down. We've seen that play out several times. We see a little bit of that playing out right now. So moving down into the sort of area between 26.50 and 26. So very intriguing to see that. Interesting to see that GameStop is still pre-market, kind of in the 26.30 range, just a bit before open here. So what does that mean? Does that necessarily, on the fly, does that necessarily change my outlook going into today? And I would say no. Right. Basically, if you had a chance to, well, for those of you perhaps who had a chance to go ahead and read this article before the video dropped, you'll know that, and you can take a look at this here. Right. I was basically looking at some of our short-term, immediate kind of signals. Looking at our 15-minute or 30-minute chart, basically pointing to a bit of downside early today, and we can see that, right, we did end up having some more upside in us yesterday. We moved up to the 27.75 area. 27.76 was new high on that trend, and then cooled off. We moved back down right atop that short put position there that we've been pointing out. So that's trader short puts, so dealers hedging that by buying shares as it's approached, and then basically sat on that pretty much the entirety of the pre-market out and after hours period. We also have a few moving averages concentrated around that area, so it sort of made sense as a support point into that lower volume trading. Volume did stay up. It did come down a bit from Monday. What was very noticeable was that options volume came down so much. So options premium basically split like it was last Friday. That is pretty much right down the middle in terms of bullish and bearish premium. About 15 million total dollars spent. So that's not quite half of what we saw. It's a little more than half of the money we saw spent on Monday in the options market, but volume's still up and about double what we were seeing versus last week and the week prior, heading into that sort of DeepSeek bottom 2.0 trouble over tariffs Star Trek episode of a down trading session last Monday. So interestingly, very little activity in terms of shorting. XRT is off reg show. Shares are replenishing here. Up to 2.7 million, right? So this is the most we've seen since basically our November run. These are the levels that we saw present when we started to trade up, basically end of October, early November. It actually got up to about 3 million at that point. So good to keep that in mind as far as what that can mean for institutions kind of being able to cut the legs out from underneath a type of run like this. Always important to keep that in mind. Right, we started to trade down, and basically that trading down toward the end of the day had us inclining toward some of our lower bounded moving averages. Basically, what I circled in our charts for today on these shorter terms, so 15-minute, 30-minute here, looks like, okay, if we had to pick a direction to go in based off of how we have been moving, how we ended the day yesterday, what our nearer moving averages are looking like. It does look like we are going to move down to that $26 area, and we do seem to have already started to do that pre-market right now. What's going to be really key for us today is how we behave around that $26 level. If $26 can hold, and we'll see why this is the case as we take a look at our options data shortly. If 26 can hold and we can consolidate atop that level, as long as SPY doesn't say, drive itself into the dirt, then it does seem right. Well, and I should say that maybe SPY dropping down to something like 590 during the day may be the sort of thing that makes $26 fail as a support point. But if GameStop can consolidate atop that level, if it can trade kind of between 26 and 26.5 throughout the day to day, I think if we go ahead and take a look at some of our longer technicals, or longer time frames up at the 2-hour, 4-hour range here, we can see that we do have a solid bit of upside basically left in this move. The 2650 serves as a stronger kind of consolidation point. And then even if we kind of come down early into this area, into the 26 area, if we can hold above 26, then yeah, we've still got a chance. I would say, right, that 2880 area I was talking about earlier as being a possible upside, which we can still see here on the daily chart. I think that's still really kind of a maximal extension to the upside. It would have to be pretty super bullish to make our way up there. If we, for example, kind of stayed consolidating where we are, maybe traded up a little bit, closed a little bit above 2650 today, still showed, I don't know, 6, 7, kind of got back into that 8 million volume range. And then say, I don't know, Roaring Kitty had a tweet or something at 8 p.m. Eastern time again. I think we could see, then you get into the 2880 area at this point. But because of 28, we've got several moving averages here converging overhead. On the 2-hour chart, we've got, what is this, the 202-hour. And then on our 4-hour chart, we've got this is in orange here, this would be the 104-hour, right? So these are essentially the same moving average. 2880 is so close, right? We could really get up there maximally. I do think $28, because of how big I would say a call gamma dominant position, what does look to be trader net long calls, that is trader net positive gamma, that is dealer net negative gamma. At $28, it's a very big call position. Does look like it's going to serve as an overhead resistance point that sort of lines up with that moving average. So I will revise pre-market today. I think if we do see $26 hold and we do start to move back to the upside today, maybe even early tomorrow, something like that, I do see $28 as the much more likely near-term overhead for that. I think you'd need some kind of external event to see that kind of 2880 range pop up that I floated as a potential maximal extension kind of earlier this week based on what we're looking at now. If we scroll down to, let's go down to our gamma stuff real quick and then kind of double back to our open interest. Right, we can see basically what we're looking at in terms of how things are looking in dealer gamma hedging structure here, options market maker hedging structures. 2650, right? This is still that primarily trader short put position, which means dealer long put position. That means dealer net negative gamma, which they're going to hedge by buying shares as the gamma values on that contract position increase as it's approached intraday, right? So gamma values spike as any strike goes into or out of the money when it is approached. So it's about to go into the money or it's about to go out of the money, right? If it's approached from above, meaning it's about to say, if it's a put, go into the money, or it's approached from right. If it's approached from above, coming down, then dealers are actually going to buy shares that are going to counteract that movement based on their needs to remain delta neutral with respect to those negative delta and gamma values on their books. So that does offer some intraday support. It does look like we're going to open up substantially below that. $26 does look like it's going to offer some intraday support based on the net trader long calls at that position. However, if we do fall through there, if SPY does keep working its way down, if we don't kind of reverse back over the volatility trigger by open, then it does look like we would kind of slip down through that 25.50 area, down to maybe some support at 25, and then kind of recover back to 26, maybe intraday, and then kind of end the week trading in the 25 to 25.50 area, maybe closer to 25.50. Keeping in mind, of course, that moving into the end of this week, we're still looking at a $26 max pain level, regardless of whether we would, kind of move up. If we can basically stay at top 26 off the open, stay supported in this area, I think there is a chance that momentum can pick back up, and we move. We could have that kind of move back up into the 27 kind of area, 27.50, 28 test. Like I said, I think that 28.80 is kind of an outlier at this point. Then we could see that, regardless of whether we see that develop either in the second half of today, early on Thursday, or we see that move down into the 25.50 area kind of early, and then something of another recovery into the end of the week. I still think that we are probably looking at a max pain finish this week. What also keeps that likely, right, and this is what I'll return to in terms of our open interest data, is the result of Monday's trading. If we look at some of our strikes farther out, right, we kind of see we're settling in to consolidation in this area, basically all the way out to earnings. For the remainder of our expiries in February, we're looking at $26. Very interesting to see February 21st move up to $26. From 25, it was at 25 for a very long time, so it's moved up to 26. Today's max pain 26. Open interest for February 28th, still on the lighter side, but looking like $26, and then 25 so far for March. We'll have to see what happens as we get closer to those expiries, and we get some of the OI built up at those positions, which is still really pretty light, considering I'll say March OPEX, but is still pretty light considering where we are. But IV is very low. I'm not surprised that we have a lot of really, really short-term trading in terms of where our IV is concentrated. We're kind of back in this situation of only kind of trading stuff that's only a couple weeks out, pretty close. So I mean, that's basically what we're looking at today. If we do move back to the upside, I would expect IV to go a bit of the way with it. Back to the upside, but right, again, because we are still so far out from these bigger catalytic events, from earnings, from whatever Ryan Cohen and the board might have for us, basically at that point in time, because we are still a ways out from that 2-week appreciative IV ramp into earnings, I'm still not seeing a reason why we would stay too elevated in terms of our price, or get too far away from these max pain values that we're seeing now. Right, we're still 4.5 weeks out, basically, maybe about exactly 4 weeks at this point from Q4 earnings. So important to, maybe it's even 5, right? And it's still probably 5 and change. Thinking about it, right? 1, 2, 3. 4, 5. Oh, is it 6? 1, 2. Even more so. 5, 6, 7. Yeah, it's 6. We're actually still about 6 weeks out from earnings, because they're gonna come out probably around the 26th, 25th or 26th. So after March OPEX. So we're still 6 weeks out from earnings. Definitely important to keep in mind as we try to make sense of this this upward recovery, this bullish recovery, this kind of bullish mini recovery into this next stretch. So so that's what we're looking at today. Right, you can obviously find today's remarks summarized at the synthesis section of the article, and you can dig through some of my breakdowns of some of this data and technicals yourself over on my X page. If you're a newcomer to the channel, you can check down in the description. You can have a link, see the link to today's write up. So yeah, thanks, of course. Thanks to everyone watching and listening. Thanks for everybody for your continued support as we make it through this long stretch, right? What feels like this 40 years in the desert, to see when we're going to pick that momentum back up, right? It does look like our trend is still intact, but man, it can be difficult sometimes going through these, this kind of reset phase, going through another one of these cycles. So we'll, we gotta, somebody needs to go ahead and post that hang in there meme from Roaring Kitty. But that's the season. That's the season. So yeah, well, excellent. Thank you very much, everybody. We'll see you. We'll see you tomorrow. Take care now.